Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So in general, trading plan that we discussed on Friday for possible downward continuation has worked. But it is interesting that if you'll take a look at the weekly chart, you will see that performance this week was smaller, and drop was smaller compared to the performance of the previous week, although the Wyoming meeting was this week. It means that market mostly have shown reaction on the Fed minutes protocol that was more decisive and actually have shown the Fed view on the perspective of the United States economy and suggesting the steps that they intend to take, while the Wyoming meeting, they have brought a bit some details. So and it means the second conclusion that we could make is that despite that some points from Jerome Powell's statement was rather hawkish, speaking on the pain on the households, that they will have to be patient and this inflation will stay for a longer time, and it might be a bit painful and expensive for households' wealth and so on. This is not really pleasant moments that he has announced, but at the same time they makes no decisive impact. They mostly are the same that we saw in the protocol, and as a result it hasn't changed the balance on the gold market too much. Yes, price has dropped, showing the reaction on anticipation of the 75 basis point move in September probably that we will see, but it's difficult to say that this was totally unexpected. And result of all this stuff, I just have checked for the comments, for the news, opinions of the different big banks and well-known analysts, and well, in general they speak mostly the same, and we also I do not see any reasons to change our major long-term view. As we said last time, that we expect stabilization of the gold price around 1650 1680 area on the major very strong monthly support area. The pressure from the Fed that they intend to increase rates, and maybe they will increase a bit stronger, not to the 3.5 potentially, but to the 4.25, 4.5%. It doesn't change the core. It just make rates to hold the possible gold reversal for a bit longer. Gold could stand the pressure for some time, but we do not expect the drop. We do not expect downward continuation. We expect some stabilization above the 1650, 1680, and some volatility on the market just because of the hawkish Fed policy. When these factors will start to exhausting, and the problems that we discussed in today's report on the gold market are coming on the surface, I am speaking about the time bomb on the stock market that we discussed last time, and today we have brought some new issues on this. I am speaking about real estate market. That then is absolute disaster right now, so we have shown you in the weekly reports as well on the gold market, you could read. And finally, that no doubts Fed and United States Treasury will meet big problems with the placement on the new debt, United States Treasury bonds, mortgage-backed securities, and other stuff. This definitely will be big problems closer to the end of the year. When all this stuff will come into the surface and the reserves of the Fed that they have right now starts to exhausting, the gold starts drifting higher. So our view is that within the year, maybe a year and a half, we could see the 2 times greater prices on the gold. So 1.5, 2 times greater. So I won't be surprised if the next year we will start talking about the gold market and it will be around 3,000 per ounce. So it's absolutely possible. Meantime, in the short term, we already have the major driving pattern. This is weekly grabber. Weekly grabber absolutely fits to new fundamental picture that had been set on Wyoming. and it suggests the taking out of these lows, retesting of these lows, maybe some even flirting around this area, because major monthly support stands in an area of the 1660, approximately 1680, so it's rather wide area, so where market could fluctuate, and we suggest market should reach it, maybe not next week, but within the short-term period. And our short-term trading based mostly on this. So the weekly grabber that also actually exclude currently the consideration of the long positions and the bullish positions in the gold market. We would not consider it. Speaking on recent performance, take a look. Flag that we have talked about has been broken down. This is bearish sign. And currently, actually, we should control a couple of moments. First of all, market should not return back in the flag. If it will happen, it doesn't change the bearish context, but it could suggest a bit deeper retracement to the upside before downward continuation restarts. So returning inside of the flag will be bullish sign in the short term on intraday charts and could suggest some more extended action to the upside. We would like to avoid this, or at least to protect our position against this scenario. If it will not happen, then we just expect downside continuation to the COP, because market is not at oversold, overall context stands bearish, trends on all time frames stands bearish, and we're just watching for this nearest target that we have, 1685. On the follow time frame chart, you could see that Friday performance was great, according to what we talked about in daily video. After reversal bar, no bullish grabbers have been formed. If you remember, we talked about it, guys. We said take a look whether the bullish grabber will be formed here. It has not been formed, and take a look even more. Another bearish reversal bar has been formed. Market creates the new top and closed below the lows of the previous bar. This was additional confirmation of the bearish context. After first reversal bar, second reversal bar has been formed, and then its collapse has followed on the press conference of Jerome Powell. Market now is coming to the same support, 618 support that we have, 1729. It already has been tested. On the second test, also we could expect minor bounce. So, and particularly this rally we could try to use for selling, considering taking the short position. On the hourly chart, two moments to watch for. First of all is levels, of course, and first one is 1742 that we could consider. Second is 1746, 1747 in confluence. This is first moment. It's two levels where you could consider taking the short position. Second moment is take a look. As we do not want to see market return back inside of the flag, we do not consider any other levels for taking the short positions by far. This is the final level that we're watching for. It means that if you decide to take position here, you do not need to place too far stop. So you could place it either above this area or even above the confluence. Because if market will break the confluence, return back inside the flag, it means that the short-term bearish continuation fizzled, and it means that we should wait for some another chance. Normally, if everything goes as it should be, market could reach even this level, but it should not return back inside of it. It could show some retest of this broken line, and then should turn down again. This will be classic and perfect bearish performance that we are watching for. So based on this scenario, you could think about whether taking position or not taking position, at what level to take position. Just think about this if you are searching chance for taking the short position here.